Bismillah ar-Rahman ar-Rahim. My topic to you this morning is on the future of global Islamic banking movement. The Prophet, peace be upon him, said, لو أني أعلم الغيب لاستكثرت من الخير. My translation is that if I knew the future, I would have attained more of the goodness. I'll try to share with you some of my expectations on the development and movement of Islamic banking in the future. This movement is very much affected by how well the Muslims are doing in the world. In other words, the level of prosperity is going to decide the fate of this movement. Of course, this is measured in relation to the other nations. This is one very important factor. But another more important factor in shaping this movement is the regulations pertaining to Islamic banking and finance in the world. The globalization also, which is taking place in the world today, is promoting the openness of Islamic countries. The World Trade Organization is taking a more center stage, and therefore Islamic countries have to open their doors to many economic players. That is also promoting the infrastructure of regulations in these countries. Regulations is going to become the cornerstone in economic development in the Islamic world. But what makes regulations so important in Islamic banking? That prompts another question in my mind, which is, what is the distinction between Islamic finance and banking and the conventional one? The greatest distinction, of course, is based on the precepts of Islamic jurisprudence, that is fiqh al-mu'amalat, which is making the distinction between the two systems. Fortunately, the area of Islamic jurisprudence in economic transactions have been applied recently or modernized to economics, which is shaping this industry of Islamic finance and banking. If you have heard of the accounting and auditing for Islamic financial institutions, abbreviated as IOFI, which is responsible for introducing so far 28 accounting and auditing standards. And this organization have gone a step further 2 years ago by establishing a Shura Council or a Sharia board, a Sharia Council or a Sharia board. The reason this is important is because this Sharia Council is setting a standard which is going to help in uniforming the fatwas so that we're becoming more in agreement on what's Islamic and what's not. IOFI also has taken steps to pursue the central banks in the Islamic countries to adopt its standards, whether it's the accounting and auditing standards or the Sharia standards. But the central banks are not the only regulators in any country. There are capital market regulators, there are other bodies and agencies that deal with the financial markets and the financial instruments. This is going to be quite a challenge in the Islamic countries, and it's going to decide the future of Islamic banking. To understand the future better, we have to look at the experience of different countries. Now, while some countries have shied away from opening its doors to Islamic banking and they're worried about it, some others have taken very serious steps. Some of the countries that have moved forward and continue to do so is Bahrain. Bahrain has not only regulated Islamic banking under its central bank, which is Bahrain Monetary Agency, but has also allowed 20 Islamic banks so far, around 20 Islamic banks so far to operate. Some of them onshore, but the majority offshore. The Bahrain Monetary Agency also have joined the Islamic Development Bank and Labuan Offshore Authority of Malaysia to introduce Islamic notes which are based on sovereign risk. The first note that was launched about a month ago by the Bahrain government, it's guaranteed by the Bahrain Monetary Agency, but in the plan, several countries are going to introduce these notes using the influence of the Islamic Development Bank. The Bahrain government has also encouraged the secondary market movement for Islamic financial notes through its stock market, and it has allowed many financial instruments, Islamic financial instruments, to be listed and traded there. Bahrain also hosts IOFI, the organization I just mentioned, and the Islamic Banks Council, which is a new organization sponsored by IDB. Bahrain has also issued regulations for variable capital companies using the Mudaraba concept. So Bahrain has played the center stage, and it's going to see more growth of Islamic banking in that particular country. Malaysia also has done a good job in regulating Islamic banking. The government is committed to its growth to the extent that it has set targets for its Vision 2020 and the shorter term plans. The government of Malaysia have been issuing Islamic notes, and there is an active secondary market there and several market makers. Malaysia also have set an excellent example of how takaful industry should be, since there is a number of takaful companies, which is the substitute for the conventional insurance. As I mentioned earlier, Labuan, which is Labuan Offshore Financial Authority, has a mandate to promote Islamic banking and finance along with Bahrain. Some other countries like Sudan, for example, which have set a good example in regulating Islamic banking and finance and insurance across the board, they've done a good job in my opinion, but their experience is not showing because it's hampered by their own economic and political scene. There are other countries which are moving toward regulating under the Islamic law, like for example Kuwait has an Amiri Commission to overlook the implementation of Sharia in all of its regulations across the board, including capital markets, banks and insurance. There are other countries, in my opinion, that are watching the trend and they are expected to join soon, but I will not speculate which countries these, but that's going to continue to happen, and when that happens we're going to see more growth in Islamic banking. Two things I should mention here in light of the globalization taking place in the world today. The globalization is inducing all countries to regulate and therefore allowing laws that promote investment banking, which the Islamic countries are deprived of having laws pertaining to investment banking at large, except maybe for Malaysia. These laws are very necessary for promoting Islamic banking and finance activities. So that is one good move which is going to help Islamic banking. Another factor is that this openness and globalization is seen as an opportunity for Islamic bankers, since there are 1.2 billion Muslims around the world and some are minorities in the non-Islamic countries. So there is a possibility of taking this Islamic banking model to the other nations. So those who are going to lead that movement are going to reap some rewards. The recent trends that you may have heard of the consolidation that's taking place in the Islamic banking industry. Dar al-Mal Group, which is Faisal Group, has consolidated 2 of its subsidiaries and merged with another one. So they ended up with 3 entities with a much larger institution. Within Al-Baraka also, they have established a bank holding company in Bahrain, which is merging with a Kuwaiti Islamic financial institution. So there is consolidation also taking place, and that is expected to go on. Now, if we look geographically, we will see that the Islamic banking in the Gulf countries is growing at double-digit rates, and I name some of the institutions which are growing aggressively: Al-Rajhi in Saudi Arabia, Kuwait Finance House in Kuwait, and Abu Dhabi Islamic Bank in Abu Dhabi. These are growing at double-digit rates and doing very well. And the main reason they are doing so because they are onshore and they are in prosperous economies. So that takes us back to the original point, which is related to the prosperity. I'll move also to the non-Islamic countries, and I'll talk about the United States, since the United States is setting an example by being a leading economy. And there is a large Muslim minority here. The market here is very well regulated, it's active, so that's fertile ground for Islamic banking to grow, since there is a market. However, there is a question of how large is the market and whether there are economies of scale. I'm sure this is going to be covered more in depth by the other speakers, but in my opinion, I think the United States presents a very good example of how markets should be regulated. And from my own evaluation, there is a possibility to establish many of the Islamic financial concepts here using the current regulation. It's just a matter of understanding the system and adapting to it. Particularly, I would say, in the asset management and in the Islamic home finance. And I think you all heard about some of the recent movements of HSBC, which is Brother Iqbal Khan is going to cover, and some other institutions like MEF and, of course, LARIBA. If that movement continues in the West, especially in the United States, we're going to see more of that in the other Western countries and the other non-Islamic countries, as the Islamic minorities prove that this sector is feasible. For the sake of time, I'd rather stop here, and thank you very much for listening.